Dude, John Deere.
John Deere, I love John Deere. Nothing runs like a deer. If you work for John Deere, contact me. I have a product for you. DGFspray.com is my product. I need to sell it to you.
Look at the stock price this year.
Oh, Lord. So right off the bat, you're not interested.
No, that's not true. It's just something tells me it's going to be very expensive.
It looks expensive already.
It does, doesn't it? Okay.
This is John Deere. Let's go.
$85 billion market cap. 31 PE, X. 8% profit margin, X. 1% dividend. So they're paying about $850 million a year in dividends. So far, 2 X's. Decent gross margin, 26%. They manufacture a lot of big stuff. They're going to be very reliant on the economy, agricultural equipment, etc.
Revenue growth over the past 5 years?
I imagine it's going to be very low. Maybe they made an acquisition here. 26 billion to 34 billion. Check. There was an acquisition here somewhere, maybe a disposition, but the revenue has been falling the last few years. That is not a good thing. So we still have a check mark because it's growth in the last 5 years.
Profit growth, Paul.
So profit growth.
Pillar number 4.
1.5 billion to 2.75. Check mark there.
So far, so good. How about shares outstanding? You want this number going down?
Oh, this is why their revenue fell. This is the quarter ends in October, and obviously that included the pandemic. Shares outstanding, 315 million down to 313. So check mark.
Keep going, Paul.
Balance sheet. Total current assets, 51.3 billion. Current liabilities, 23.3. Check mark there. They almost have enough money on hand to pay off all their liabilities. They're about 9 billion short. So nice job there.
How
free
about
cash flow.
Free cash flow growth over the past 5 years, baby.
And I love that this free cash flow will include the pandemic. That's what I like.
Why is that?
What do you mean? That's
Why would you're excluding it from restaurants?
Well, I mean, it's going to show still positive free cash flow even with that.
Okay, keep going.
Oh, but they haven't had free cash flow. Oh, jeez. 800 million to 4.8 billion. So check mark, but negative 400, negative 900, 0. Jeez, oh, Pete. What's our average? Why is that?
I don't know.
What do you mean you don't know?
I didn't do it. I'm looking at it.
I'll do it. Ready? So minus 100 minus 500, 4.3 divided by 5 is 860 million. Okay. So it's about 100. It's selling right now for 100 times free cash flow.
Yes. 100 times free cash flow.
Guys, I'm not sitting there. I'm not looking at this thing saying, I mean, the free cash flow number is just insane. Why is it so up and down? Why do they have such a big jump in their cash from operations? Let's look at their operating income. Operating income. I mean, it's going up. Cash flow. Let's see if they spent money on acquisitions. Big acquisition there. Yeah. So guys, the other thing is they're like, they made a disposition here, or it was a net disposition. I mean, I don't like the fact that I don't know. I'm not keen on John Deere at this time, at this price. Am I interested lower numbers? Of course I am. The question is where. I don't know. Because their revenue is not growing.
Take home on John Deere is a big no.
I mean, look at them. In 2012, they did the same. They did higher revenue than they did in 2020. So again, just because they're not growing doesn't mean it's not worth something. It's just to pay 30 times PE and 100 times free cash flow on the average of the last 5 years. And of that average, they averaged 800 million a year, and 4.8 billion was done in the last year. That's just, things are not adding up.